Morning everyone and welcome along to the Fat Profits Research webinar for this Wednesday the 4th of March. A lot of questions coming through on Qantas. It's obviously had a great run since that initial purchase at $1.31. A lot of people looking at this one, Greg, and saying, is it still worth holding on to? Is it time to take profits? And if not, where do we see the company moving from here?
Yeah, we covered Qantas last night in the report. Obviously, the temptation is, when you've seen any stock perform as Qantas has done since its lows, is to pull the ripcord, as it were, and take some profits. I suppose, yeah, there is a lot of emotion swirling around this one, and this is a stock that's been, I suppose, in the dog box or facing a lot of headwinds for much of the last decade. We actually exited our recommendation on Qantas almost 10 years ago, way back at 330. It still hasn't actually got back to those levels, but yes, the stock has doubled in the past 6 months, and since our initial recommendation, it's been a good result, and it's been one of the best performing shares in the ASX. So that certainly, I guess, on the face of it, would provide a case to taking some profits out. But I think the other problem you've also got with this, when it comes to emotion and Qantas, is that even going back a year, this is a stock that the market sort of loved to hate. And scrolling forward a year, suddenly you've got a lot more positivity surrounding it. But I think you've still got this corner of the market that, I guess, refusing to believe that Qantas stacks up as a credible investment opportunity. We think there's a number of tailwinds that have worked for Qantas over the past 6 months, and the penny's starting to drop for the market, but we think there's further to go, and a lot of the Aussie dollar is really just a piece of that. That's part of the mix, but certainly by no means the key drivers. You look at Qantas from a valuation perspective, you look for full year 2 earnings, it's under 7 times, so it's pretty cheap on that basis, unless you don't believe that a lot of these tailwinds are going to remain in force. The oil price has certainly helped. That's something we didn't really factor into our original recommendation on Qantas. We didn't then make the call because we thought oil prices were going to collapse. Obviously, certainly they've been very weak, and we do expect the oil price to edge up and establish a base at higher levels, but by the same token, we don't think we're going to see $80 plus oil prices anytime soon. The company's cost transformation or cost reduction program is going really well, and in fact that's actually ahead of target, and they're continuing to find costs to pull out, so that's going to be a key earnings driver as well. Meanwhile, if you look at that the result that came out last week, and across the divisions, things are going pretty nicely for them, and I guess one of our key reasons for going into Qantas was that we saw the capacity wars abating, not only in Australia but also overseas, and that appears to be playing out. He had a very good result from the domestic business. The war with Virgin is starting to abate, and that's going to help hold up earnings in the domestic business. The international business, it's turned a profit for the first time since the GFC. Capacity is also abating there as well. I guess the other key point about Qantas as well is that it's been stripping out costs, but it's actually not been taking shortcuts. It's not been taking out costs in the wrong areas. The fleet's as young as it's ever been. They've simplified the fleet. They've continued to invest in the fleet as well. So I think that all bodes pretty nicely. If you look at the balance sheet, that's the asset backing there is pretty positive from what it has been. A third of the fleet are now debt free. The operating cash flows came in at $1 billion, and they got $2.9 billion in cash. So I think, a lot of boxes have been ticked for Qantas, but I don't think any of these tailwinds are going to suddenly turn to headwinds anytime soon. And that's really the key reason that we've kept the buy recommendation on Qantas. We originally had a target of $3, and we're getting pretty close to that. But look, if we do see the shares push through $3, that could really open up higher levels. And we've seen targets abounding around the market about $4 plus, and I don't think you could rule that out.